Hi, today we are going to discuss crypto versus traditional investment. Which is the better for you? In today's video, we will go deep into advantages and disadvantages of investing in cryptocurrency and traditional investment like stocks and bonds. I will break it down into easy to understand section so you can decide which option fits for your financial goal. Let's begin by understanding the basic of these two investment types. First, what is a cryptocurrency? A cryptocurrency are digital or virtual currencies that exist only on the internet. They don't have physical form like a coin or a dollar bill, and they are not controlled by any government or central bank. Instead, they rely on a technology called blockchain, which is like a public digital ledger where all transactions are recorded. Some of the most popular currencies are Bitcoin, Ethereum, and Litecoin. Each of these coins has a different purpose and value. People invest in cryptocurrency by buying this coin with the hope that the value will rise over time, allowing them to sell at a higher price and make a profit. Example, imagine you bought one Bitcoin for $500 in 2016. By 2021, that Bitcoin was worth over $60,000. This kind of rapid price increase has attracted many investors to the world of crypto, but it is important to understand the risk involved as well. Number two, what are traditional investment? Traditional investment including things like stock, bonds, and mutual fund. These investments have been around for many years and are the most common way people grow their money. Stock. When you buy a stock, you are essentially buying a small piece of a company. If the company does well, the value of your stock goes up. If the company performs poorly, the value goes down. Bond. A bond is like a loan you give to a company or a government. In return, they promise to pay you interest over time and eventually return the original amount of money you invested. Bonds are generally safer than stock, but they also offer lower return. Number three, pros of investing in cryptocurrency. Higher potential for profit. A cryptocurrency have the potential to deliver huge profit in a short period of time. For example, Bitcoin, which started in 2009 with almost no value, grew to over $60,000 per coin in 2021. Some people who invested earlier made life-changing amount of money. Next is global and 24/7 marketing. Unlike traditional stock marketing, which are only open during certain hours, cryptocurrency marketing never loses. You can buy or sell crypto at any time of the day from anywhere in the world. The next is new technology and innovation. Cryptocurrencies are built on blockchain technology, which is not only used for money but also for secure transaction in many industries, including banking, healthcare, and even supply chain. For example, Ethereum allows the developer to create a smart contract, which is self-executing a contract with terms directly written into code. Next is decentralization. Cryptocurrencies are not controlled by the central authority like a bank or government. This means that they can be more resilient to things like inflation or government mismanagement of the currency. Let's talk about cons of investing in cryptocurrency. High risk and volatility. Cryptocurrencies are extremely volatile. Their price can swing wildly in just a few days. For example, in 2021, Bitcoin dropped from $60,000 to under $30,000 in just a few months. This sudden drop can lead to a huge loss. The other cause is lack of regulation. Because cryptocurrencies are decentralized and not regulated by government, there are fewer protections for investors. If a company handling your crypto goes bankrupt or get hacked, you could lose all your money. and there might be no way to recover it. Another is hacking and security risk. Cryptocurrencies exist online, which make them vulnerable to hacking. In 2014, the Mt. Gox exchange was hacked, and 850,000 Bitcoin were stolen, worth over $450 million at the time. Many investors lost everything because there was no insurance to protect them. Next is complicated to use. Buying, selling, and storing cryptocurrencies require understanding how digital wallet and private key work. If you lose your private key, you can lose all your money and there is no way to recover it. With all those cons, there is a pros of traditional investment, which are stability and reliability. Traditional investment like stocks and bonds have been around for centuries, and they are generally more stable than cryptocurrencies. Large companies like Apple, Google, and Microsoft tend to grow steadily over time, and while the stock may fluctuate, they usually don't lose their value overnight. Another is dividend and interest payment. Stock can pay dividend, which is a small payment made to shareholder as a reward for investing in the company. Bonds paying interest at a regular interval, providing a steady source of income over time. Example, if you own 100 shares of a company that pay you $1 dividend per share each year, you would earn $100 every year just for holding onto those stocks. Another pros is regulation and investor protection. A traditional investment are heavily regulated by the government. This means that companies are required to provide transparent financial information to investors, and there are strict laws to protect against fraud. For example, in the United States, the Securities and Exchange Commission monitors the stock marketing to ensure fair trading practice. The other pros is less volatility. While the stock can fluctuate, they are generally less volatile than cryptocurrencies. Bonds, in particular, are considered very safe investment because they offer guaranteed interest payment, and you are likely to get your initial investment back at the end of the term. Number 6. Cons of traditional investment, which are lower potential for quick gain. The traditional investment usually grows slowly over time. While this stability can be a good thing, it also means that you are less likely to see the rapid growth that cryptocurrencies can offer. For example, a large company like Coca-Cola may only increase in value by 5% or 10% per year. This is much slower rate to return compared to the possible 100% or more you might see in crypto, but it is also much less risky. The other cons is limited trading hours. Stock marketing are open during specific hours. For example, the New York Stock Exchange is only open at 9:30 a.m. to 4 p.m. Monday through Friday. If there is breaking news after hour, you have to wait until the market opens again to buy or sell. Other cons is inflation risk for bonds. The bonds provide a fixed return, which means that the value of interest you earn might not keep up with inflation. If the cost of living rises faster than the interest you are earning on your bond, your money loses value over time. Now, let's talk about a real-life example and case study. First, crypto success story. In 2010, a man named Laszlo Hayes made the first real-world purchase with Bitcoin, buying 2 pizzas for 10,000 Bitcoin. At that time, 4,000 Bitcoin were worth about $40. By 2021, those Bitcoin would have been worth over $500 million. This story highlights how earlier investors in crypto saw huge returns. Another real-life example and case study is traditional stock success story. Warren Buffett one of the world's most famous investors, who built his wealth primarily through stock. He invested in companies like Coca-Cola and American Express decades ago, and those stocks have grown steadily over time, making him one of the richest people in the world. Bond examples: during 2008 financial crisis, many people lost money in the stock market, but those who had invested in the United States Treasury bond were safe. These bonds are backed by the United States government and are considered one of the safest investments in the world. Hence, the choice between cryptocurrency and traditional investment depending on your financial goal, your risk tolerance, and how much money you are willing to lose or gain. If you are comfortable with the high risk and the chance of losing money, but you want opportunity for faster, large profit, cryptocurrency could be a good choice for you. If you prefer stability, long-term growth, and more protection, the traditional investment like stock and bonds might be better fit. Many experts recommend a strategy called diversification, which means spread your investment across both cryptocurrency and traditional assets. This way, if one investment does not perform well, the other might help balance your portfolio. In summary, both cryptocurrency and traditional investment have their own pros and cons. Cryptocurrency can offer rapid growth but comes with high risk and volatility. But traditional investment like stock and bonds are more stable and reliable, but the growth is slower. The right choice depends on your personal financial goal and how much risk you are willing to take. If you enjoy this breaking down, don't forget to like, comment, and subscribe below for more tips and how to make a smart financial decision. You're welcome. You're welcome for the next video, and don't forget to share our Wealth Wizard channel.